Well, good morning, everyone. Thomas Montgomery. It's a beautiful Thursday morning. Today is September 4th, 2025. We get together most weekday mornings, talk about strategies, tips, techniques, share success stories, and support each of you. At any time, if you have any questions, comments, concerns, feel free to type those into the Q&A box. So in the background is our website, 509pacific.org. We are a 501c3 nonprofit. We have received a grant, and our grant has three mandates. Number one, to help improve financial literacy. Number two, to give away free shelf corps. And then number three, using that knowledge and those shelf corps to go get money to start or grow a business. Obviously, everything that we do is legal and ethical. On the website itself, it's divided really into three sections. The first section here at the top is quick cash. Quick cash is a bit of a different animal. If you're not familiar with it, we've had past trainings that you can see on YouTube or even on 509pacific.org. There's an on-demand training here. And then for individuals that want to participate, you can participate by clicking this link and it pops up the packet. We've had a number of you that are resellers ask, can you resell quick cash? And the answer is yes, yes. So all you would need to do is, let me pull back up our notes here. Just text us if you're wanting to resell quick cash. We'll provide you the editable documents. So just like I clicked here and it brought up this, we'll send you an editable flyer so you can put your information on the bottom instead of ours. And then we'll provide you an editable agreement. And that way you can change the pricing the way you want. Because normally you would mark it up. So think of what Amazon or what Walmart does. They don't make peanut butter, for example, but they sell Jiffy and Peter Pan peanut butter. They're kind of brokering from the manufacturer, the originator, to the end consumer. You can do the same thing with quick cash. You can do the same thing with our shelf corps, which is here towards the middle. So we're certainly here to help the end user, but if you're someone that wants to help educate, help others, and make money, that's how we go about it. We call it a reseller model. It doesn't cost you anything to be a reseller. You don't even have to sign a contract, but we can provide you the quick cash packet, editable, so you can mark it up if you want. Just like Walmart, they mark up the peanut butter. Some people are thinking, well, I shouldn't charge more than it costs. Well, how do you think Walmart stays in business or Amazon? If you're brokering between the originator and the consumer, it's okay for you to make money from that. And if not, you probably won't stick around. So, quick cash, you can resell. Just text us and let us know. If you want to resell the shelf corps, then that's a little bit of a different animal. Come down here to the bottom and fill out this inquiry form and let us know. So, not really the point today, but just wanted to clarify that, well, first, what's on the website, the three sections, but also to let you know that, like Brandon is on here. No, Brandon's not on this morning. Normally he is. Brandon is out in California and he is reselling quick cash like there's no tomorrow because it's a great solution to a lot of people's problems. He's marking it up. We have a number of you, of course, that are doing that, plus most of you that are distribution partners are reselling the shelf corps and marking it up. So just so you know how that works. If you have questions, let me know. So our agenda today, which we just covered, number one, making sure that you know 509pacific.org is where to go if you're not working with a reseller. If you're working with a reseller or one of our branch offices, of course, you can interface with them. If not, 509 Pacific, and you have access to the resources there. We're going to start out by talking about some key concepts for business funding. And so this is relevant if you're looking for funding to start or grow a business, or if you're one of our distribution partners. If you go out and teach these key concepts, I think you'll find that there's tremendous interest and need in the marketplace. Alfonso's bringing up a good point. On our YouTube channel, we have a lot of past trainings, but one of which is called the 27 mistakes. The 27 mistakes is a really good curriculum if you want to go out and teach in person or online. So you can get familiar with that, called the 27 mistakes. It's about an hour long, where the concepts we're talking here are truncated down into just a few minutes. But Alfonso's point's correct. If you want a deeper understanding of key concepts for business funding, go to the YouTube channel and type 27 mistakes in the search. We also want to make sure that we're all familiar and comfortable with understanding how participants can spend less than $500 one time. Everything else through the capital raise process is designed to fund itself, to support itself, and the end point should be, is planned to be $1 million or more in business funding. So we'll break that down into more understandable steps. Second to last, it's interesting. Sometimes, especially for those of you that are resellers, you have people that come to you and they want something that's almost too good to be true. And so our program's not too good to be true. It's legitimate and credible, and we do what we say, and everything's put in writing. But sometimes it feels like that you're trying to compete against perfection. And I think kind of controlling that conversation and asking the prospect, well, what other options are you looking at to be able to accomplish $1 million capital raise in the next 30 days? Or more specific to this point, what's your cost of doing nothing? So you could give this a try. It's guaranteed for less than $500. We can get you positioned for around $1 million in around 30 days. But if you don't do this, sure, you save your $500, but you've lost your opportunity for $1 million. What is your cost of losing $1 million? Does that mean you can't go acquire that business you wanted to acquire? You can't go hire the employees that you wanted to hire? You can't go purchase real estate? I think if you turn the table a bit, the conversation on your prospects, and help them understand how strong of a proposition this is, which we'll go through in a moment, and what is the financial impact of them not giving it a try. It's probably significant lost earnings or lost opportunity equal to $1 million or more, and then Q&A throughout. All right, so let's go ahead and get into these key concepts. If you have any questions, comments, concerns, let us know. First key concept makes sense, but a lot of people skip it. If you want business funding, you need to first have a fundable business. We've ran into so many times on almost a daily basis, people ignore that. No, just where's my funding? I want funding. Well, first we need to have a fundable business, and we have a process to do that, and I'll be describing that. But you can't skip that. It's like saying, okay, I want to be a doctor. I want to be a doctor. Well, have you gone to medical school? No. Well, then you're not going to be a doctor. You're not going to just get funding because we're an angry toddler pounding our fist on the table. We need to have a fundable business first. So let's talk about how we accomplish that together. Well, what it means to have a fundable business isn't always the same answer. There's lots of different lenders, and most of those lenders have multiple loan programs. So the answer is it depends. It depends on which lender and which loan program. So each lender and each loan program normally has its own underwriting criteria. And if we meet that underwriting criteria, then we're ready for business funding. If not, we either need to resolve whatever issues are there or pivot to a different lender or loan program, which we help with, of course. When it comes to the underwriting criteria for business funding, it can be kind of easily summarized into the 3 C's: credit, collateral, and capacity. So different lenders, different loan programs look for different combinations of those 3 C's. Not all of them look for all 3 C's. And in fact, there's some outliers that look for just one of the 3 C's. So we can work with clients, and if all they have is credit, but not the others, collateral, capacity, there's funding available. What if they only have collateral? Great. We have some niche lenders in that space. Or what if they only have capacity, which is cash flow, otherwise known as bank deposits? What if they only have that? They don't have collateral, they don't have credit. There's niche funding sources for that. So we always need to have at least one of the three C's. The more the three C's, the more options we have. And traditional lenders, which I'll get to in a moment, like SBA, they're typically looking for all three C's. But each lender, each loan program has their own underwriting criteria, so it's not always the same. Therefore, we really want to work with each client to figure out what their wants, their needs are, and their mitigating circumstances to match to the right lender, to the right loan program, because that's going to allow us to get to funding the quickest, right? If they pick the wrong type, of course it would take longer because they're lesser qualified. We want to pick what they're either already qualified for or the closest to being qualified, and then assisting them with any remaining issues. Hopefully that makes sense. Now, that's what we do, and we're called technical advisors. You're a technical advisor if you're a distribution partner, we are too. So this is a reputable, recognized role. We're not the lenders, we're not the banks. People come and say, well, how much money did you loan yesterday after 3 p.m.? Zero. We're not a bank, but we facilitate the relationships with the banks. We help clients get a free shelf corp so they have that foundation. We help them build their loan package. We help them overcome the issues so we remove the barriers so they get funding. So 100% of our participants, as long as they participate, will get funding. It's guaranteed in writing. It's a literal written guarantee that we make. So everyone will get funded. How much will depend upon what they qualify for. No one will ever get more than they qualify for, right? You have to have a fundable business. But let's say that we want, or we have a client that wants more money than they qualify for now. We can either get them what they qualify for now and then fix the problems to get more, or we can skip the initial funding now, work with them to get fundable. So it's never insurmountable, right? These three things are all variables that can be legally manipulated. Someone doesn't have good personal credit, or a business doesn't have good business credit, we can address that. Someone doesn't have collateral, we can address that. Someone doesn't have capacity, otherwise known as cash flow, we can fix that. So no one is locked out from really as much funding as they want, but we can't ignore the fact that we have to qualify. When we look at business funding, there's lots of different options, but I think for the purpose of what you and I do together, it's best to really put it into two buckets, two primary buckets. One of which is based around traditional business loans, including SBA loans, and then the other is ABL. So SBA loans, which we'll talk about in a moment, look at all three C's. Then we have some niches that look at just credit, just collateral, or just capacity. ABL is one that looks primarily at collateral. So let's look at some of the differences of these two types, SBA and ABL, because most of our clients, most of the grant participants are going to use one of these two. Normally, they wouldn't use both. Usually, they'd use one or the other, and it's up to them. We can help them either way. So with SBA, we got to remember SBA is the guarantor. They're not the lender. So we're going to have to get approved through the SBA lender and also meet the SBA guidelines. And as I referenced before, normally traditional business lenders, including SBA loans, are looking for all three C's. Is that bad? No. Is that a problem? Well, it depends on the applicant, but there's a higher hurdle to jump. In contrast, we have revenue-based financing that's just based on capacity. We have asset-based financing that's just based upon collateral. And that's what I would consider more of an expedited, simplified underwriting because they're focused on one C entirely or primarily versus trying to meet all three C's. So that's why about 9 out of 10 of our clients now, our grant participants, are choosing ABL. It's always their choice. From an owner contribution, there's also a significant difference. If we want an SBA or a traditional business loan, usually the lender is going to ask for at least a 10%, could be 20 to 30% owner contribution. They want to see that the owner has skin in the game. Well, to no surprise, that can be a problem for some. So that's another reason why the ABL is so popular, because it normally does not require any owner contribution. Thus, it's easier and cheaper to get into. Mark is asking a question which is great. He's asking, what are the incidental costs during the capital raise? But what's the answer to that, Mark? It depends, right? So we need to determine, Mark, for you and for everyone else, based upon your wants, your needs, and your mitigating circumstances, what type of funding are we going to go after? Are we going to go after normally either SBA or ABL? So I just gave you the one of the parts to your answer, Mark. If you want to pursue an SBA loan, that's fine. It's not really a cost, but it's an underwriting criteria. SBA and traditional business loans are going to look for the applicant to bring at least 10% owner contribution. We don't have to do that with ABL. As far as how we can use the money, it does that also varies by lender and loan program. In general, the SBA is a bit more restrictive. The example I typically give is in real estate. If you wanted to buy a commercial real estate building, can you do that with an SBA loan called SBA 504? Maybe. It depends. How are you going to use that building? The SBA will not finance or fund speculative real estate. The way that they've defined that is, if you're going to use 51% or more yourself, your business, then yes, they'll finance it. But if you're going to use smaller than that, in other words, more of that's going to be used for clients, tenants that are paying you rents, then they won't. So there's just restrictions with SBA, which aren't necessarily bad, just need to be aware of them. But with ABL, normally no restriction on funds. So you can again see over and over why many people prefer the ABL to the SBA. But we can help with both. We all used to work at the SBA. Loan sizes is another significant difference between SBA and ABL. SBA can start very small. There are SBA microloans that are sometimes $5,000 or $10,000. Then they can go up normally to around 5 million. As you would expect, the larger the loan, the more rigorous the underwriting, the more closely they're going to look at the three C's. In contrast, both revenue-based financing, which we've not talked as much about, and asset-based financing, which we are talking about, typically the bigger the better. The lenders like bigger deals. So in terms of ABL, some of the big boys like Bank of America and Chase, which we've highlighted on prior trainings, they start at 5 million. So they don't go up to 5 million. They don't go normally below 5 million. Other lenders will go down to 2 million, some will go down to 1 million. But in general, we need to be doing at least $1 million capital raise, or ABL doesn't make sense. Now, in some cases, you have clients that say, well, that doesn't work for me. I don't need $1 million. But if we set that up as a line of credit, it kind of mitigates that, because they might have $1 million line of credit, but they don't have to use it. Then they could use just whatever portion they want. They only pay back the portion that they've used, and as they pay it back, it reopens up that line of credit. So I don't think loan size will chase anyone away from ABL, but we do need to know that they start at $1 million. Payback assistance, I think, is a phenomenal point, and some of you get it and you share the same excitement I do, and then others don't seem to assimilate it well. But payback assistance is a concept, a mechanism whereby there is an ability for the borrower to not have to pay back the loan or not have to pay back all of it. So with the SBA, that doesn't apply. If you go get an SBA loan, or your client gets an SBA loan, they're going to be expected to pay it back. That's the way loans normally work. In contrast, through the grant we received, which we talked about up here, we actually have a payback assistance that's built in that allows us to normally, by design, pay the first 2 to 3 years of the loan payments for the client. So these are some key differences between SBA and ABL. Is it everything? No. Is there more that you should know? Yeah, probably. I would go to our training channel and definitely watch that 27 mistakes we talked about earlier. But these are some key elements. Let's go ahead and turn to the next topic, which is number three. How can you and I help someone if all they have is $500 or all they have willing to spend is $500? How can we help them take that $500 and turn that into potentially a million plus capital raise in as short of 30 days? How is that possible? How is that legal? How's that ethical? How does that work? Well, let's literally go through how that works. So the first thing that we want to do is get them into a shelf corp. We're going to have a fundable business to get business funding. We've covered that. The shelf corp, because of the grant, we give those away. They're going to have a processing fee to pay. That's determined by you, the reseller. But other than that nominal processing fee, they have the shelf corp, and now we have the foundation to build off of the capital raise. So that's step one. Then you might say, well, my client says they already have a business. Well, great. But if we're going to use the grant, we want them to accept the free shelf corp, do the capital raise off of the shelf corp. And then if they want to transfer money into their other business or businesses, that's their choice. But we've tried working with clients using their current business entities, and often there's issues there. So this is the easiest, the quickest, and the most affordable way we can approach it. So then the next thing that's going to happen, we need about 7 days, about 1 week. And at that time, we're going to transfer to the participant, the grant participant, the shelf corp deliverables, everything from the um, business in a box, the business plan, the financial projections, the corporate filings, and so forth. So we need about 1 week to get that to them. And then at that same time, we're going to go ahead and go into the funding phase, which we call phase two. This is kind of phase one, and now we're describing phase two. So literally in a week, we'll get them the shelf corp deliverables, and then we're going to be ready to start the funding process. They'll have a simple one-page app, no docs, no hard credit check, and we can start getting them what we call first tranche offers, first round offers. How much they get will vary, hardly ever above $250,000. Everyone will get at least one offer. A lot of people get many offers. They don't have to accept any if they don't want. They can accept one or multiple. But the bottom line is this first tranche is normally funded to them in less than 2 weeks, often in about 10 days, because we start working on it on day 7. So normally 3 days is enough to fund, but certainly within 2 weeks from the starting point, they should have cash in their hands. And so any other incidental cost, like Mark was asking about, now they have the capital to do it. They don't have to pull more money out of their pocket. Again, I'm giving you a normal example, a reasonable normal example. So I know there can be exceptions, there can be outliers, but this is literally how it was designed. Less than 500 out of pocket from beginning to end. So then we will then work with them to identify the right type of funding, which we talked about a little bit earlier, based upon their wants, needs, and mitigating circumstances, build out the paperwork which is necessary for business funding called loan package. I run into some people and they're like, loan package? I don't want a loan package. I just want the money. Well, that's an illiterate approach. When we're going for larger amounts of business funding, we need to put together the documents and resources that the lender is going to need for approval, and that is called a loan package. So yes, we need a loan package. I know for personal loans you don't, but that's not what we're talking about. So then we're going to help them get the loan package in order, apply for the funding, and then get them the larger funding. Some people will be disgruntled. They'll get this first tranche and say, well, I only got 175,000. This is a freaking scam. Well, that's an interim round of funding. We need to go build the loan package first and then go after the large business funding. So if you understand these three steps as I'm describing, it makes sense. Some people don't understand it and they can be disgruntled. Well, my first tranche, it was only 385,000. This is a ripoff. Well, no, that's all you qualified for from the first tranche. We need to do the additional loan packaging to get the rest. One other point I wanted to make is the bonus item, and some of you are leveraging this, some of you aren't. In addition to all that we said, we also have the opportunity fund. The opportunity fund, of course, didn't cost anything. And that's where we're putting daily deposits into the grant participant's bank account. Why would you want to do that? Well, that makes their bank account look stronger. It makes their P&L look stronger. It shows that their business is alive and vibrant and not what they call a zombie business. A zombie business is a label that they sometimes use in the lending industry where the business is just sitting there and it's not really open, it's just there. And of course, zombie businesses are not near as fundable as live businesses. So we can help with that if they need. We talked a bit a few minutes ago about the cost of doing nothing, and this is just the concept of what the opportunity cost is. So you could almost take a little stronger approach, and I know this is the way that Carlos does it. Different people have different approaches, but he says, hey, I'm going to introduce how this grant works, and at the end of the conversation, I want you to make a choice. Either you can put $500 into this, which is this point here. For less than 500, we can get you plugged in. We can get your shelf corp in about 7 days. We can get you funding offers in a week. We can get funding in your pocket in 10 to 14 days. We can build out the loan package, and ideally we'll be able to go for 1 million plus in business funding in about 30 days. So that's option one. Option two is don't do it. Don't do it. Save your $500. But what's that going to cost you? It's going to cost you whatever you would have had the money to spend on. And when you look at it that way, and especially, people will want to get all critical, and that's fine for them to be analytical, but you may want to stop and ask them, well, what's your plan B? Do you have a better option than spending $500 and turning that into 1 million plus in about 30 days? Do you have a plan B that's better than that? I don't think many of them do. All right, so let's go ahead and get to your questions, comments, concerns. Again, remember 509pacific.org is how you can get plugged in. Tech support line, it's a text support line, some people like to call it, but it's a tech support line. The phone number is answered live. It's down here at the bottom of the website. This is the text line, which we encourage you to use, and then the YouTube channel. All right, Mark asked about cost for the ABL. So that's a great point. So if we're going to use ABL, which is asset-based lending, we said, we're going to need assets, right? Because the funding is based on assets. So if we don't have assets, it's probably not a real good choice unless you want to get assets, because you need assets for asset-based lending. Through the grant, we're able to transfer assets over in the form of accounts receivables, and we transfer them for 1 penny on the dollar. But for those of you that have had any accounting classes or background, it's not an expense. They're literally buying an asset, a real asset, for 1/100th of its book value. So that's crazy good, right? If you could go buy a piece of real estate for 1/100th of what it was worth, would you do it? Sure you would. If you could go buy a car for 1/100th of what it's worth, would you buy it? Of course you would. Well, that's how the grant is helping these folks that are less fortunate than you and I. We'll transfer the assets to them. So guess what? Now they have the assets for that. But it's the answer to your question, Mark, is it's 1 cent on the dollar. Well, what does that mean? Well, how short are they? If they want $1 million and they have no assets themselves, 1% of $1 million is obviously 10,000. If they want 2 million, then 1% of 2 million is 20,000. It's linear, no surprises there. But we turn around and help them liquidate those receivables, and that's how we're able to accomplish the payback assistance, because our program is designed to liquidate the AR quicker than the payments are due. But I'm getting a little deep there. Thank you, Mark. All right, so any of you that have individual questions, definitely recommend texting because I don't have the ability to quickly pull up everyone's file here for a self-help session. Yeah, and Bella, any of you that are clients that have individualized questions, or any of you that are resellers and have individualized questions, yeah, take advantage of the tech support line. Explain what the issue is, what your need is, what the question is, and we're happy to help you individually. Let's see. Kenneth is asking about resellers getting paid. So the resellers have the ability to mark up the quick cash, which I opened with. They have the ability to mark up the shelf corps, which I've referenced. So they control how much they make there. And then the 5% on the back end is based upon, and there's no 5% on quick cash. So let's scroll down. The 5% on the back end is based on the client's capital raise that they referred in. So if the client has $1 million capital raise, for example, it's 5% of that 50,000. So it's not get rich quick. It's not the type of money that a lot of you are used to making, but you should be making at least 50,000 for each referral. And many of you are averaging a deal a day, 20 a month. Some of you are doing more than others, but I don't know. It's hard to meet all of your expectations when I have so many high profile individuals like a lot of you, to say, hey, 50,000 per referral, do 5 a week. It's $250,000 a week. To me, it's a big deal, but I know to some of you that's not very impressive, but that's all we can pull off. Tajani's asking about the ODM. We did have a marketing program. I guess it launched back in July. That is continuing to be available for our branch offices. So the outsourced business development is for branch offices. It's no longer available for resellers. So if you have a branch, yes, and it comes free, by the way, for branches, no longer available for resellers. But if that doesn't mean much to you, don't get caught up in that. Just he had a specific question, so I wanted to answer that. All right, well, I think we covered most of everything. We'll be back tomorrow morning. If there's any individualized assistance you need, we recommend texting your request. Try to clarify what it is you need help with, and we can get it to the right person. And then Shelley had asked us to put this quote up. We were listening to a whole lot of money before the Zoom started. And Shelley had asked us to put up one of her favorite quotes. So that's where that came from Nicki Minaj. All right. Thanks, everyone. We'll see you back tomorrow morning. Have a great day. Bye.